Hey, what's going on, guys?
What's up, Kris?
Dude, Landon, you're a regular in the studio.
I feel
here.
really comfortable at this table by now.
You got that
First
seat.
few times.
Got your name on it, brother.
Yeah, I got my name. I like it.
Yeah. Today, who'd you bring with you? You brought in a straggler.
We did bring in a straggler. Look at the hair coming out the back of that hat right there. Those locks. This is Kabe Call, one of our fine loan officers.
I love this guy. I actually know Kabe really well. So, and his dad Eric. I've spent some time on the mountains with this guy. And
of course.
You're trying to give your dad a run for his money. I've seen his locks.
He kind of started the trend, but I'm just trying to get ready for September. I mean, that's all I'm dreaming about right now.
February.
It is
I know.
February.
Yeah.
There's no snow on the ground. It feels a little cool. It's like a September morning.
Well, welcome to the studio. These
Thank you.
guys, Idaho First, you guys are like the best around when it comes to lending and mortgages. And
Thank you.
so freaking excited to have you guys in the studio today. So we're going to do things a little bit different. I was talking to these guys and we're going to do a little bit of market update.
Yeah.
But I also wanted to talk to these guys just a little bit about maybe some misconceptions in the industry, maybe throw some warnings out there for a lot of people right now. I know they're kind of thinking it's impossible, right?
Yeah.
It's a little bit challenging in the market right now, so we're going to talk about those things. But Kabe, we just kind of joked. Why don't you go ahead and give a formal introduction? Let's learn a little bit more about you. You married?
I am, yeah. So Kabe Call, grew up in Shelley. I am like Landon. I'm a husband and a father and have 4 kids of my own. So my oldest one being 9, and then just had a kid turn 4 yesterday. So a little bit of a range, not to the extent of Landon, but yeah.
They're not done though. I heard. They're just
They're just letting it roll.
Yeah,
just
so
keep it rolling one at a time.
I don't think Kabe's making that decision.
no,
Landon.
definitely not.
Oh no.
I've met his wife.
Yeah,
She has a little bit of control.
Yeah.
A little bit of a grip
Yeah.
on that.
I've heard
as
that
every wife does.
she shoots the biggest animals in that.
That's
house,
what,
is
that's what I've
heard,
seen.
too.
Yeah, I've
So-
seen some pics.
She's a freak. She's a stud. So yeah, no, it's good. And then I mean, anything to do with kids and being outdoors. I mean, I only work to have fun. So
You like to golf. You like to. Do
I like
those
to golf.
things,
I like
too.
to take Landon's money and a little bit of other stuff. But yeah,
How long you been writing loans? How long you been doing this?
I was actually thinking that this morning. I think since 2021. So
'Cause
4
before
years.
that, I mean, real estate for you is not new.
No.
You've been doing this 4 years, and before that, you were working in title.
Yep.
So
Yeah, and so that's how I know you is from marketing at the title company. So I've been in the real estate industry for 6 years, and then writing loans for 4. So it's been fun. I've enjoyed this industry. A lot of good people, something new every day. More so to do with loans than title company, but I mean it's a blast. It's fun.
it's always changing.
Yeah, there's never anything that's the same.
Awesome, Landon. What would you say about Kabe? You've been working with him for a while.
So Kabe, when he was getting out of the title world, I may have been one of the first guys that Kabe came and talked to. I give him crap about this all the time.
Of course.
And I didn't know that I was competing for Kabe with my own business partner. But Kabe ended up joining a different team within our company. And then that ended and Kabe decided to stay with our company. And hopefully that was a good choice. He's been killing it. He's been doing great. He's got great relationships in the industry that trust him. And we just provide him hopefully with the tools he needs to be successful, good back end group of people that help support him in his business, which allows everything to go smooth so he can just golf all the time and build relationships. It's fantastic.
Hey, you might want to blame Kris because that same marketing trip Kris was on. So maybe he helped sway the other way.
Hey,
We don't need
If
to
it
go
takes some
back in
pressure off
history.
me.
It's
you don't
fine.
need to be flinging arrows in here.
Just
Kabe.
kidding.
I mean, yeah, that was an interesting trip. And I think that's the one thing about real estate we all know is, if something seems like it's going to stay the same, it won't.
Right.
No.
Right? Things are always changing. People are always kind of moving around, and there's always opportunity. That's one of the things that I love about real estate is it's not just one path. You can be in mortgage, you can be in title, you can be in, a realtor, but there's just all these different arms that make it interesting and keep us on our toes for sure.
Yeah,
So-
absolutely.
I think that's what's cool though about this industry is there's a lot of like high level people, and if you surround yourself with them, that helps a lot. Like I was on that trip with you and a couple other people, and I mean I was the little guy there, and you guys were like, what are you doing? Like, level up. And so it was cool. That was what was cool about it is I mean, there's a lot of high-end people in here, and if you surround yourself with those people, like, it helps you too.
Yeah, some of the best deals I've made have been on a snowmobile or on a golf course or on the side of a mountain flinging arrows with buddies. So
one thing I heard there, is there anything comfortable about our business or our industry? I think it's the most uncomfortable place to be. Nothing is guaranteed. You have to work and earn everything that you make. Nothing is given. And so when you decide yourself to jump into that and to, like, I'm going all in and I'm going to decide what I'm worth instead of letting someone else decide what I'm worth, it's amazing what can happen. And hopefully Kabe's seen that in his career, where he's probably made more money than he's ever made in any other job or business he's been involved in, because he's in control of that. And if you've got some talent and a little bit of drive, you can do some awesome things. So.
I agree. I think the other thing that, to your point is I act like there's nothing consistent in the industry. There are consistencies. And when you treat it like a business as opposed to a hobby, then you tend to stick around a little longer in the industry.
Absolutely.
And so, you guys at Idaho First, I would say one of the things that sets you apart is systems and models and tools and resources that, you've done a great job of working with. I was able to meet some of your partners down there in Utah, right. Canopy guys, and they've done a great job of creating products and staying in front of the trends with technology. And then you offer that to Kabe and Caleb, who I think we need to give a special shout out to Caleb. Like,
I think we do.
Yeah. Where's that empty chair?
Bless Caleb. He's not here today, fully intending on being here. Why he's not here, none of us.
Yeah, you just let us
know.
No, I mean,
a little bit.
And that's a lack of consistency. So, Caleb, you're welcome next time. We just got to give you a hard time. He got screwed up. He thought he was riding with these guys.
Yeah.
And
not his fault. Lack of communication on my part as the fearless leader of this group.
I mean, I do think the text message thread said, I'm going golfing after this, so I have to drive
It was
separate,
quite clear that we were all driving on our own.
Yeah.
Separate. Well, but Caleb's over there as well, and you guys have a great team. So let's talk a little bit about that. What do you guys offer? If you were let's talk to maybe somebody out there that's a little bit, frustrated with the market as it sits right now. What advice would you give to somebody that's wanting to buy a home, but they're looking at these interest rates, they're looking at home prices? What do you say to somebody that comes to you and just says, man, I really want to do this. I feel like I'm qualified, but I can't afford a payment. Like, what's your advice, Kabe?
Oh, man. I mean, my biggest advice for people right now is obviously make sure it works out for you. I mean, like I mentioned, I think I was watching some of your guys' videos. Like, things nowadays are just more expensive. It's hard. So if it doesn't work out for you and you're not ready, like, that's fine. Like, Landon and I aren't pushy people. And so if it works for you, then that's great. I mean, we're going to do everything that we can in our power to make sure it makes sense for you, as far as, making sure you're comfortable running monthly payment numbers, whatever it might be. Like, we're going to walk you through the whole process. Our team is awesome.
So tell me what that looks like. If somebody comes to you and they just don't know, and they come and sit down with Kabe, what are you asking them? What do you walk through with them so they get a better understanding of what this looks like?
Yeah, so I'm going to walk through, I guess, our whole process, and hopefully I'm answering this right, but I'm going to walk through our whole process as far as the pre-approval. Like, I'm going to talk to you about your income, how many hours you're working, if it's guaranteed income or if it's, an hourly wage. We're going to look at your debts and your credit score to see if, those are in line with what we need to be able to do. Look at debt to income ratios, and I guess kind of how high you can go, but probably what we would recommend you stay at to be able to still live and enjoy that house. And we're going to go through that process, and at the end of that process, give you like a pre-approval amount. Like, hey, this is what you're approved for. Here's what monthly payments or numbers are sitting at. If this doesn't work for you, we can go less. Like, that's always easy to do. And here's where you're sitting. And that's where I think, we're going to set ourselves apart too, is like, I'm happy to sit on the phone with you or send you text messages. Like, let's make sure that this is right for you and you're good with it. Because the last thing we want is at the end, someone comes to us and blows it all up. And it's like, man, we didn't necessarily waste our time, but that's not our end goal.
What would you add to that?
Can we talk about a couple of misconceptions when it comes to this part of the process?
Absolutely.
Because I understand the hesitation of a lot of people taking that first step. It's kind of a scary step. We're not scary people, but a lot of misconceptions are these guys are sales guys. And I think there are a lot in our industry that all they do is sell, sell, sell. They're on the phone in a cubicle somewhere just trying to get somebody to say yes to a loan.
Mm-hmm.
If you're working with a real professional, that's not how we do business. It's not a long-term strategy. You have to take care of people. And so what we want them to do is come in, have a really non-pressure, comfortable situation where they fill out a loan application. Not hard to do. It just tells us a little bit about them, their job history, their credit score. Now, misconception number one, oh man, if you pull my credit, you're going to hurt my credit score. Well, that is true. Too many inquiries do damage your credit. But when you get your credit pulled, that credit report's good for 4 months. Okay. And because of some consumer protections, you can actually go to 20 different mortgage lenders if you want in the same 30-day window and have your credit pulled by all of them. And it's as if it was only pulled one time.
Yeah.
So that's misconception number one. Number two is, even though it might ding your credit, that credit report is good for 4 months. If you don't have your credit pulled every 30 days for 4 months, your score is going to bounce back and recover. So if you don't end up buying a home in that 4-month window, by the time you have to have your credit pulled again, it will have recovered. So I wouldn't be scared whatsoever to have your credit pulled. It's really the only way for a mortgage professional to give you good information so you can make decisions moving forward.
I think that's a great point, Landon. It's been my experience that, well, two things. It's been my experience that people make assumptions and they're assuming the worst, and there's really no way to tell where they're really sitting unless they pull that credit.
Yeah.
And the second thing is, and I've worked with you guys, I know you guys are more about putting a plan together that works for them. And so to your point, Kabe, a lot of people will get approved. They'll get approved for financing, but maybe it won't get them into the house that they absolutely love or into a home that they're comfortable with right now. And so then you help them put a plan together to maybe put a little bit of money away so that they've got a little more down so then they can level up with the house.
Yeah.
Or you help them with a strategy as opposed to guessing. And I find that that's what a lot of people do is they guess or hope, and hope isn't a plan. Hey, I hope I can do this, but the only way to truly know is to actually sit down with you guys, get an understanding of what that looks like, and then work from there where they actually know.
And now they have access to a great resource that's a live person instead of Google or Chat GPT that, it's full of great information, but man, it's a lot of information. So if you can get someone that's been doing this for a while, really, customize it to them specifically, it's going to be valuable. And I think that gives them power as they move forward. Yeah, it may not be right now, and there's no one putting pressure on them to buy something right now, but at least it gives them that information so that, okay, I know where I'm at. Here's what I need to work on. I need to work on my credit score. I need to work on a savings. I need to probably up my income a little bit if I really want to get into something. So maybe I need to, go back to school or learn a trade or ask their employer, I need a raise.
Can I get some more money?
I can't afford what's going on. Let's go.
Dish it out.
Yeah.
What about, and so that's kind of the first thing. You guys do that. You help them put a plan together. Talk to me about, and that we just kind of ran through, well, if they've got credit and they're actually qualified, what do you guys do if you're looking at somebody that, their credit does not qualify them right now? How do you handle that?
Yeah. So biggest thing is, seeing what their credit is at. And a large part of lower credit right now is just missed payments. So if we can get that all in line, that can help out your credit score a ton. Like, just don't miss your payments. It's not that hard.
Mm-hmm.
But yeah, we're going to set together a plan. We have the options also to be able to look at, like, hey, if we pay off this debt, or if we, take down your utilization on this credit card, like, this is what happens to your credit score. Like, it could have a big bump. So if you have money set aside that you can do that, like, we can usually work with your credit and get it up, in a timely manner if you have money to work with, or at least give you somewhat of a plan to, like, hey, in a month, like, this is where we could be, or 3 months. Or, if worst case scenario, if it's a lot of missed payments and we're kind of in the dump, like, hey, like, let's focus for a year not to miss a payment, and then we'll be ready to go. But yeah, we want you to get into a house just as much as you do. So we're going to try and figure out something
to get you in there.
Yeah.
Yeah. There's no magic wand to credit. A credit profile is a historical view of how do you handle money that you've borrowed from people. And if you have historically not been responsible or not made your payments, then it's really hard for a mortgage company to say, hey, you can't handle that $15,000 auto loan very well. We probably shouldn't give you a $300,000 mortgage to deal with.
Not going to happen.
There's loan programs that do allow you to go pretty deep in that credit score realm, pretty low. And it's usually because of risk that comes off the table in other areas. Maybe you're putting a massive amount of money down because you came into some money or you sold a house. You can qualify with poor credit, but that just puts the lender in a better position. If you decide, I'm not making my payments, well, we've got tons of equity in this house. We can take this property back and be just fine. Yeah. So it's all about risk. But at the end of the day, if you can show a good history of making your payments, you have a really good chance of qualifying for a mortgage and have a decent credit score. Now, in repairing credit, there are credit repair companies out there that will help you kind of navigate. Maybe there was something on your credit that was not your fault. You can dispute those, get those removed. Just doesn't happen overnight. It takes time. So with us, we can maybe refer you to a company like that or help you just do some minor things that we see on your credit report to help boost things like paying down credit cards. But it usually just takes time and good habits, and scores can come up.
That was going to be my next question. Are those legitimate? Those credit repair companies that you see out there, are they legit? Are they like...
I haven't worked with very many, so...
So in my career, 20-year career, I probably have referred maybe 10 clients to a credit repair company, and not a single one of them ever came back ready to buy a house.
Okay.
Now, I'm not saying there's not somebody out there that can help you, but it usually comes with an expense. Mm-hmm. And if somebody can't already cover their monthly payments or their liabilities, obligations, adding $99 a month or whatever isn't really a good answer to that. Better answer is probably let's start chunking away at some of these things that you do owe money on.
Cancel the subscriptions.
Cancel the subscriptions.
Right?
I don't know. It's a tough time. I don't know. If you've seen the news, you know that credit card balances in the United States are at all-time record highs.
Which is wild because during COVID, they were an all-time low.
Right. A little bit of free money was handed out during that time, right? Which helped people to do that. But as inflation has run rampant, it's an affordability crisis for just the basic needs of life. And I get it. If your wages haven't kept up with the cost of groceries, gas, heat, like you're going to do whatever you can to keep a roof over your kids' heads, keep clothes on them, keep them fed and warm. And sometimes that has to go on a credit card. So there's a lot of that. But we also have consumers that can't stop spending. So it's a double-edged sword there.
I heard somebody the other day call it, we've turned into a consumption economy.
Yeah.
Where we used to be a producing economy, a manufacturing economy. Now it's a consumption economy. Let's dig into that a little bit. When you say, when your wage hasn't increased, I want you to paint that picture because a lot of people, they'll hear that terminology. I talked to 2 people last week that were asking me, they're looking at coming to Idaho Falls from outside of the area. Yeah. And they're asking me about median household income, our economy, what supports that. So, those are the numbers that I see. What does that mean when you say wages have not kept up with inflation?
Well, the only thing I can speak to that, because I'm not really that embedded with some of our major employers in the area, but I do pay attention to reports that come out on a monthly basis that show us. We get reports about inflation. What is it happening month over month? What is it happening year over year? There's also reports about wages. What are wages doing month over month, and what are those doing year over year? And for probably a 3 or 4 year stretch, inflation was just dominating wages. We want both, okay? It's hard to imagine why, but we do want inflation. We want it to be, the feds want 2%. So we want steady inflation. I guess that's signs of a really healthy economy. We also want steady wage growth so we can keep up with that inflation. And if wages can keep pace or exceed inflation, then most Americans are in pretty good shape with their household expenses. And so when wages haven't kept up, so let's say, for example, the average hourly wage is $38 an hour in 1 month, and then that increases 0.2% the next month, but inflation increases 0.4%, the wage earner is in trouble.
That's right.
And that's what's been happening. Yeah. So in our market, it's taken some time, but we're starting to see wages catch up a little bit. And that's allowed people to buy homes because it's still happening. We have a very active market, and maybe we'll go over that a little bit, but people are buying homes. It's not necessarily the most expensive home in the market, but they're able to afford it. And that's because wages are starting to creep up there.
And that's, I was reading a report the other day where they were talking about inflation over the last 2 to 3 years has been really driven by the cost of goods. And so the expenses that businesses and that people were incurring were reflected in tariffed products and increases in these costs. And therefore, they weren't passing a lot of that. There wasn't a lot of additional money coming in. They were just having to keep up with those costs, and so they weren't passing a lot of that on in wage increases. So let's talk a little bit about the local market, Kabe. Before you came in, I asked you got any loans that you've written, and where are they? So let's talk about Bonneville County, this area. You're working with a couple of different buyers right now. You have over the last couple of months. What are the price ranges that you're seeing most of these buyers in right now?
I mean, like you said, the market's active. I mean, my February is turning out to be pretty good. And a lot of those price ranges, you're probably sitting in the 300 to 350 range is the majority. Probably 300 to 400 is probably safe, is where I'm primarily at. And I mean, yeah, it's still going for me. I mean, which is great. I need it. I mean, I have.
Would you say most
kids.
of them are first-time home buyers?
I think all of them are.
Yeah.
I mean, I have one guy that's buying a second house, which is good for him. But yeah, a majority of them are first-time home buyers. And it's funny, like as you guys were just talking, and this might be a little bit of a backtrack, but I mean, a lot of people can buy houses as long as they're just smart with their money. Like I think there's just the perception that, you got to have the brand new truck and stuff like that you get those people, and like, yeah, it don't matter how much money you make, but if you're blowing it every month, you're not going to be able to afford a house. But then I have people that like make $23 an hour and they're getting into a house. Yeah, it's a $200,000 house, but she's smart with her money and everything. So
paid off her car, not a brand new car.
Yeah, a used car, $200 dollar monthly payment. And so, I mean, it might ruffle some feathers, but there's people that make good money. They're just not smart with it. And so that's where I think we have the problem too. But yeah, I mean, the market's active, and if people are smart with their money, or at least somewhat, like, we can usually help them out.
Well, especially with first-time homebuyer programs. Those programs are built to help people get into homes, lower down payments, to no down payments. And so I think you're right. And that's what we're seeing. We just pulled numbers in, and we're going to talk Idaho Falls, but right now in Idaho Falls, in the last 6-month period, it's about a 3.2 month supply of inventory. In the overall market, we'll dive into, the whole market. But if you switch that from a 6-month view and drop it to a 3-month view, we're showing at about a 4-month supply of inventory. So a full month difference. Inventory's grown. Pendings and closings have dropped. And that's just, I think it's a little bit of a reflection. You made the point, time of year will affect that. But when we jump into the hard numbers, I mean, look at that number.
Crazy.
Our average purchase price in the market, and this is, we've got 3 different prices we're looking at here. The original list price was $430. After a price reduction, it's $415, and it'll go under contract at that number, and then $407 is the final closing price, which speaks to exactly what you were saying.
Yeah.
Is that down? I think last time we looked at Bonneville County together, at least, it was like $430 range.
Yeah. It's
for
down,
that final sales price average.
It was.
It's down to $407.
And that was November of last year.
Yeah.
So, in that period of time, we've seen a reduction, obviously. Yeah. And I would say realtors are feeling that. I've talked to quite a few realtors over the last couple of months, and it's either feast or famine. Some are really, doing well. Others are really struggling. If you get into the higher price points, and this is, like I said, Idaho Falls, in the last 3 months, there have been, let's just look at the 500 plus market. So, and I'm going to go a million plus. There currently is 14 active properties on the market. 0 of those have sold in the last 3 months. If we switch that to a 6-month view, let's see what happened in the last 6. It is 3. So in a million plus, there's a 28-month supply of inventory, over 2 years.
Wow.
And that is really telling. Everything over 500,000 is more than a 5-month supply of inventory. And, National Association of Realtors, they say 6 months is really kind of a balanced market. And I would say 5 to 6, we're starting to feel like we're moving more into a buyer's market. Under 500, you're still at like 3.6 months supply, which is what we just said. Like there's 2.8 in the 2 to 500,000 market.
So I had a client ask me the other day, it was more of a real estate agent question, but I was on the phone with them and they said, okay, and I had them pre-approved. And I said, now it's time to go do the fun part. You've done all the painful part, getting pre-approved. Now go do the fun thing with your real estate agent and go shopping. And they said, well, okay, so should I be offering asking price? Should I be offering over asking price to get a house, or should I be offering less than asking? And I can't really answer that because I know every listing is different, and that was kind of my canned answer was, hey, you're gonna have to work with your agent on that. They're the expert and they have access to all the data, but where you ultimately offer on a home will be dependent on where that home is currently listed. Is it supported by the market? Is it going to have competition from other buyers? And the agent's going to help you navigate that. So tell me what you're seeing when client maybe asks that same question.
I think the answer you gave them is a really good answer. The buyer pool in these individual markets is very educated anymore. Yeah. They know the market. They know if inventory's been on for a long time, they know it. And that also means that when something hits the market that's appealing, that's Joanna Gaines-ish, that's very popular, then I've seen in the last 3 months, there's been 2 homes that I was competing. Like, because it was in these price ranges. When we were in COVID, we saw numbers like this, 2 months supply of inventory. Well, 2.6 is where it's at right now. Crazy. And so, if you're in those price ranges, and Rockwell does a great job of mixing things up, but I would dare say if you went and talked to those guys, I should give them a call and just see. I know Nate over there, but I know that they have houses that sell quicker than other designs, colors that sell quicker than other colors. And so that's kind of what your real estate agent needs to be aware of is, okay, are we competing? But, the overall list to sales price ratio in the market it's like 98%. So homes that list are selling. Now that's a little bit of an anomaly because that number works off of the price that it was when it went under contract. So it doesn't necessarily reflect the reductions, right? Yeah. But it's a hard question to answer. I guess the right answer is how bad do you want it?
Right. Well, I think everyone's looking for, is this a buyer's market? I mean, do I have all the leverage right now? And I think the answer is depends.
Yes.
Some homes you might have leverage, some homes you don't.
If you're in the $1 million plus, you got some leverage,
serious
man.
Leverage, yeah.
I mean, nothing's sold in the last 3 months. Yeah. You want your house to sell, you're probably going to have to you're going to do some conceding and get creative.
How many of your buyers, though, you're working with right now are getting like closing costs and stuff covered?
Pretty much all of them.
See, and that would be me too. And that's why I tell people, I'm like, I don't know, I guess if it's a buyer or seller market, but a lot of people I'm working with are getting closing costs covered and, maybe a little bit lower price. So.
Which wasn't the norm during COVID. Yeah. So it is shifting. That is a shift. It's a signal into a more buyer-friendly market. When I say we're competing, it's not like we have a laundry list. I remember in COVID, I had to create a spreadsheet for my listings, and it literally, some of them would have 12 offers. And so then you're going through and saying, who's the lender? What's the down? What's the
Yeah.
language? Like
Yeah.
you're assessing. There's
Handwritten letters.
yeah,
Motivation
exactly.
letters. Pulling
You
the
had to
heartstrings
bury
a little
those in
bit.
an addendum to make sure that they got
Yeah,
presented.
absolutely.
Yeah, but it's definitely softened since then, and so that's kind of what we're seeing.
But it gives people the chance to go and actually see the houses and see if they like it versus the COVID where it was just like, here's my offer.
Yeah,
Hopefully it smells good and stuff like that.
it does.
They're really intentional about their home buying now.
Yeah.
Is the home right?
Mhm.
Is the location right? Do I like the schools? The inspection period is actually
Reasonable.
being utilized.
Yeah,
And yeah, if there's something that's deal breaking, then the seller will usually come to the table and, participate. So yeah, kind of nice
it is
in a way. It feels normal.
It does, and I mean, you want that. You want a balanced market.
Yeah.
That's when it's good for, I think, everybody involved.
Yeah.
I sell a lot in Island Park, and we're seeing, because there's higher price points up there, people are getting creative with their financing. Sellers are more willing to maybe carry a note, or just because the terms are a little different. I'm going to ask you this question.
Okay.
What is, and I know you've got stories for days. Talk to me about what you've got. Somebody, they're pre-approved. They've actually found the house. We're under contract. We hear these nightmares. Like, tell me what a buyer in that situation should absolutely not do, and what have you seen somebody do that kind of just ruined the deal for them?
Yeah. I mean, there could be a full podcast of this, right?
Oh yeah.
I mean, I think the general, like, basic answers are, don't go buy a brand new car. Don't rack up the credit card debt. Don't do all this stuff. But I mean, yeah, there's been instances where I had someone pre-approved, got a house under contract, and it was kind of a lower end price point that we were at. And so it was kind of hard to get into a house. And then they wanted to just decide to take a 2-week vacation for their honeymoon that happened like a year ago. And it's like, I got to be the bad guy to tell her that we can't do it now, and the agent,
Wow.
which the agent understood. But I mean, yeah, that was one of those
because the pay stub, the most recent pay stub,
ones. Showed 0 hours.
0 hours. So
Oh.
when you do the average income for a variable
Yeah.
income borrower, and you have to use the most recent data, just a little bit of average like that with 0 hours on the most recent pay
Yeah.
stub
So it can
killed
kill
the
you.
deal.
Yeah.
Yeah.
Wow.
So,
I hope that honeymoon was worth it.
well, yeah, I don't know.
It is funny that people will they're in the middle of a big financial transaction, a big deal, and they'll go make these mistakes, or make like buy a vehicle while you're buying a house. Probably doesn't make a whole lot of sense. I've had some that didn't think it was a big deal to change jobs, or to go from a W-2 employee, which is what we had them pre-approved on, to an independent contractor.
Wow.
Because, I mean, I'm making the same income. I just don't have to pay taxes on it until I file my taxes. Well, now you're self-employed, and those guidelines, as we all know, are completely different.
I
Than
need 2 years.
Need 2 years now.
Yeah.
You're not buying a house for 2
Yeah,
years.
just to explain what the difference is, just in case somebody out there doesn't understand. We all understand what you're talking about,
Yeah.
but if you got a W-2 job, and literally you can have that job for 6 months.
Yeah.
And it's showing consistent work, steady pay.
Yeah.
So
Listen, I get that it doesn't make sense sometimes.
Yeah.
Right?
yeah.
I mean, I can go to school for 4 years, not make a dime, graduate, and go get a job making $80,000 a year, and buy a house before I even start my job. But somebody who has been grinding in their own business for a year, making great income.
But showing no profit on their taxes.
Well, that's another scenario.
Yeah.
Once they file their taxes, showing no income. But even if they did show income, I still can't help you with a mortgage until you've been grinding for 2 years and have 2 tax returns that you can provide. So
That show
those
enough
two
income.
don't make a whole lot of sense to
No.
the average person, right? So again, we're not operating in necessarily a common sense environment like in the old school banking where you'd sit across from the banker and you would show them and tell them all the reasons that they are a good risk. Now it's all, are you meeting these in the box guidelines, and can you fit in that box? And self-employed is a completely different box than a W-2 employee. So those are types of things that you have to discuss with your loan officer that you're working with. Am I making some changes? And should I be making those changes while we're in the process of a transaction? Absolutely not.
Absolutely.
Whatever you were pre-approved on, try to stick with that, even if it's 3 or 4 months later. And if things do change, get with them before you go under contract.
And fully disclose.
Yeah.
Please fully disclose. I've had multiple instances where child support shows up late, or something out of the blue comes in, and they knew about it. They were just trying to, we're omitting a little information here, hopeful that it doesn't show. It always shows up.
It'll always show up. We have different reports that we have to pull. We have to verify with employers the day we're closing that you still are employed there. We have to pull what's called a fraud guard that tells us if somebody owns any other properties anywhere in the United States. And you may have forgotten about that manufactured home in Atlanta that was left to you by your grandma that has a small tax liability that you've been paying. And you didn't know that you needed to put that on the loan application, but we found it, and we have to add it to your debt to income ratio now. I've had scenarios where we've had to move manufactured homes out of a mobile home park because that mobile home park had monthly rent.
Oh my
And
heck.
they didn't think that was a liability. It was being paid for by renters. So those types of things, we don't blame the borrower. Those are just nuances that can.
We literally
Well,
find
yeah.
everything, though.
Yeah.
I know.
And there's people that I think they think that they can hide something, and then it comes up, and like that'd be the biggest thing. Is like, don't lie.
Yeah.
Like pay stubs are going to show it. We have to verify everything.
Omission is a lie.
Yeah.
That's
right?
true.
Omission is a lie. So
We
don't
literally find
omit.
everything.
Yeah, be fully.
And we need to know the difference between what's full-time and what's variable. And so if I ask somebody, hey, are you full-time? Yeah, absolutely, I'm full-time. Well, some of the pay stubs show 40 hours. Some of them show 26 hours. Some of them show 32 hours. You might feel like that's full-time employment. Absolutely. But in our world, that is not full-time. And now we have to do an average instead of the 40 hours a week that we were calculating your income off of. And yeah, maybe you went on a honeymoon for 2 weeks that you didn't get paid at all, or, those types of things. Then we're averaging income, and maybe you're making more now, but because we have to do the average, it brings it all down. So,
changes the game.
yeah.
So talk to me about investors, guys. There's some pretty cool incentives out there for investors with traditional financing. And like, what do you guys have for people that own investment properties or want to get into that?
Yeah, so we have investment loans that we can do. A big thing, especially I guess probably for both of us, but like my age, range and everything like that with summer sales guys and trying to buy, multiple houses. So you can start early as an investor and buy a house, live in it for a year, turn it into an investment property and buy another one and minimal down payment. Or you just do an investment loan. 25% down is typically where we need to be, and go through that route. And that's great too. We can get an appraisal done as far as like the rent to see what the average rent is in that area, and use that towards like the debt to income ratios to kind of lower that if you have that 25% down, and do that too. So yeah, we have a couple different options that we can do. A lot of it just comes down to, once again, money, which is always
it does require cash investing. When I first got into the business, you didn't have to have cash to buy an investment property. You just
be awesome.
No docs, no income,
stated income, right?
100% financing on an investment property. Let's go. But yeah, 20 to 25% down, depending on how many units you're buying. We only do loans up to 4 units. We don't get into the commercial realm, which is anything over 4 units. We can use market rents to help offset that mortgage payment a little bit. So actually qualifying for an investment property mortgage isn't too difficult. Sometimes it requires some reserves in the bank. So let's say you used all your money on the down payment and you didn't have anything left in the bank after that. You're probably not going to get qualified. So you have to have a little bit in the bank or in retirement. And then if you get out of traditional financing, there are some One of the more popular ones you hear about is the DSCR.
Yeah, I've heard a
loan.
lot about that loan. Tell me about that.
Debt service coverage ratio is what it stands for. This allows people to buy investment properties without ever having to prove their income. They do have to pull a credit report still and your debts show up, but there's no verification of income because your approval on that home is completely based on the debt service. How much in rent are you going to get on that property? The hard part about debt service is you have to get that monthly mortgage payment at 75% or lower of what the monthly rents are. So if you're only getting $1,000 a month rent, we can only say you're getting $750. That mortgage payment has to be $750 or less.
Wow.
To qualify. So you can imagine
With rates
where they're at.
There's no 750 payment out there.
Well, I was using easy math.
Gotcha.
Let's times that by 4 or 5.
Yeah.
Hey, we brought grandma's manufactured home back into this scenario here.
Yeah, we did.
Yeah.
You have people lined up.
Oh, yeah.
So you can imagine the amount of cash it's going to require to get that mortgage payment where it needs to be to qualify for debt service. So it's exciting to think about. When I've had clients come to me wanting to do something like that, the reality is a little slap in the face. Man, it's going to take a couple $100,000 to get there. That's more than 25% down. Yeah, let's just do traditional if you can pull that off. So
That could work for an investor that already has some rental properties and is looking to maybe move some of that money into something new.
yeah.
He's probably got, he's probably in a situation where that's not as big of a factor. So
Yeah, we've had actually people that own their properties free and clear and would like to pull some equity out. We do a DSCR loan, get them a couple $100,000, keep their payment where it needs to be, and then they can go deploy that capital somewhere else. Yeah.
it's wise to be pulling money like that. You don't want to take more money than, that's why we ran into what we did.
Yeah.
That's why when you were taking 100% loan on investment properties, what year was that, Landon? 06?
Yeah, that was 2006. In fact, funny story, I was with a company whose company owner was doing seminars all over the place about this pay option arm. It's an adjustable rate mortgage that gave you 4 payment options. I don't know if you've ever heard of this. This is going back. Pay option arms, presentations, talking to people how great these things were because you had a 15-year payment as an option. You had a 30-year payment as an option, an interest-only payment as an option, and then you had a negative amortization payment.
Oh my
Meaning
gosh.
you didn't even cover the interest in your payment. So the interest was then being tacked on to the principal
my
balance every
gosh.
month. And the reason these made sense at the time is because appreciation was just going crazy. And so thinking back on how that was even a thing is wild. But if you want to know why the crash happened, it was because people are doing loans like this, not paying down principal. And then all of a sudden, when the faucets turned off and these homes are not worth what they were paid for, what are you going to do? Are you going to keep trying to make these payments or are you just going to walk away?
Yep.
And when you have an investor that's done this 20 times, he's just walking away from all 20 properties,
Yep.
washing his hands of it and calling it a day.
And that's why we have the regulations we do now.
That's exactly why.
That's why the box is a little different. Right
Which is why when people say there's going to be a crash, it's like, I don't think so, just because of the stuff we have to go through. It's not like it was in 2008, 2006. Like, we go through a lot to make sure you can qualify.
Yeah. Somebody would have to get real creative to make another crash, and people are always creative. So
You want to talk conspiracy theories today or no?
Let's get into it. No. All right. Well, you guys have anything you want to add before we bounce off of here? It's awesome to have you guys in the studio. You guys are super knowledgeable. If you guys have questions or you just want to put a plan together, these guys are great. Give them a holler. Kabe, Landon, the other guy that didn't show up today.
He's pretty good at his job too.
Caleb. Yeah. Great guys. They'll help you put a plan together. If you have questions, you call me. I'll point you in the right direction as well. So thanks for being with us today. We'll see you on the next one.
Thank you.